Hey, welcome back to the Monday Market Update with me, your host, Roy May with Bach Realty Group. I know it's Tuesday, but with it being a banking holiday yesterday, we're a day delayed. And my apologies for not putting one out last week. I had an unexpected life event occur, and I couldn't make it happen. As always, a big thanks to Mitchell Cleckley and his crew over at Pilgrim Mortgage for putting this together. Wanted to give a quick shout to 808 Technologies and my dude Randy. They're a local tech kind of AV company, and I'm a big fan of support local, buy local. And a quick, another quick shout out to all my 82nd Airborne brothers and sisters, especially my 1505 Parachute Infantry Regiment formers. It takes a special kind of person to willingly crash into the planet and kick in doors. So I love y'all. Today, we're going to take a closer look at some intriguing economic developments, really, that unfolded in September. And we've got a lot to cover, so we're going to go ahead and dive right in. So the soaring September job growth, it defied expectations. September brought some exciting news on the job front. The Bureau of Labor Statistics reported a whopping 336,000 jobs created. And that's nearly double what experts predicted, and it's the highest since January. And that sounds fantastic, right? Well, not so fast, my friends, right? The key thing to remember here is that the jobs report has two components. It has the business survey and the household survey. The business survey, where the headline job numbers come from, it relies heavily on estimates and modeling. The household survey, which produces the unemployment rate, is considered more real time because they directly ask people if they're employed. So the household survey told a different story. It showed only 86,000 new jobs created, and the report revealed an increase in people holding multiple jobs and part-time work while full-time work declined. So this suggests that there's some softening in the job market and the overall economy. So while the headline job number is impressive, we have to consider those underlying details. And moreover, the strong job numbers might raise the risk of another rate hike at the Fed's next meeting on November 1st. So, yay. So next, let's get into how private payrolls are at their weakest pace in almost 3 years. The ADP's employment report painted a different picture, showing weaker private payrolls in September, with only 89,000 jobs created. And this is the slowest pace of growth since January of 2021. So while small and mid-sized businesses added jobs, the larger ones with like the 500 plus employee companies, they were able to, or not able, but they did shed about 83,000 jobs. The leisure and hospitality sector was the star, gained 92,000 jobs. But yeah, here's an essential point. Wages have been cooling down over the past 12 months. Annual pay for job stayers went up 5.9%, and for job changers, it was 9%. Now, these figures have cooled significantly compared to last year, which indicates lower inflation pressures. So let's talk job openings being a surprise, with the JOLT being higher. So the job openings and labor turnover survey, JOLTS, surprised us. It was surprising to show an increase in job openings from 8.92 million in July to 9.61 million in August. But it's crucial to remember that despite this monthly rise, job openings are still down nearly 6% compared to last year. Moreover, the increase is partly due to the changing work landscape, with more remote jobs posted across multiple states, causing them to be overcounted in the report. And continuing with the job market, a tame unemployment claims, it's a contrast to the job cuts. So initial jobless claims went up slightly to 207,000 in the latest week, which is still close to an 8-month low. It suggests that employers are holding on to workers. Continuing claims fell to the lowest level since January, with almost 1.7 million people receiving benefits. And this trend, what it does, it reflects a mix of people finding new jobs, and sometimes it's just benefits expiring. So this good news is it contrasts with the latest job cuts report from Challenger Gray and Christmas. We're not to Christmas yet. We got to do Halloween and Thanksgiving first. But it shows that the job cuts year to date are the highest since 2009, except for the COVID-19 peak in 2020. But it wouldn't be a market update without talking about home prices, right? I am in the real estate business, and right now that means more record highs for home prices. So, kind of shifting gears to the housing market, CoreLogic's home price index revealed that home prices rose just 0.3% from July to August, marking a new all-time high for the fourth consecutive month. So, CoreLogic predicts that further price increases for the coming months, um, albeit conservatively, but their data is on track for an estimated 8% appreciation in 2023 based on this year's readings. Black Knight, which is another housing data provider we've talked about before, they reported a 0.7 increase in national home values for August, and that also marks a new all-time high for the fourth month in a row. Home prices are now at 2.5% above the 2022 peak, according to Black Knight's index, and that's pointing towards an estimated 8% appreciation for the year. In summary, these latest home prices reports they align with other data sources like Case-Shiller and Zillow, and obviously, the Federal Housing Finance Agency. They're all underlining the continued strength of the housing market and its potential for building wealth through real estate. It's just the truth. So there you have it. That's kind of a comprehensive overview of some key economic trends that unfolded in September and are finally showing up in the reports that we're getting that are finalized from last month. But yeah, so don't forget to like and subscribe to our channel for not only market updates, but also our content that's highlighting some of the amazing people around the Brazos Valley on the channel Ribs Real Estate and Ramblings, which is the one you're on if you're watching it on YouTube. And those come out each Friday. And I'd like to thank y'all for joining, and we will absolutely see y'all next week for another update. So y'all have a great week, and we will see y'all next week. And hopefully you'll see me on Friday, because that means you came back and watched an episode of Ribs Real Estate and Ramblings. So you guys have a good one. Thanks so much.